Assalamualaikum and good day everyone. In this video, we will discuss briefly on accounting system or accounting information system to be exact and internal control. Among other things that will be touched are the procedures in developing AIS, the charts of accounts as referenced in AIS, and internal control system of which computerized accounting system is a part of. Why do we want to talk about accounting system? And why do we pair it with control? Internal control to be specific. When I say accounting system, here I am referring to the accounting information system as in computerized accounting system, that is AIS. In previous session, we already know that accounting in itself is a system, since it has its own steps and procedures to be followed, and also principles and concepts to be applied in managing the accounting of financial information. We also know that accounting has three general roles to play: identifying transactions, recording and measuring them, and communicating those information to users. We also know that this can be done manually. That means we do the identifying, we calculate and measure, we record journals, then we post to ledgers. And at the end of every month, we calculate the balance of every account and bring it to the subsequent month, and we keep doing it until end of year, where we combine information from all of the accounts available and, in a way, summarize them in financial statements. Now, can you imagine the amount of work that need to be done, especially when we talk about retail businesses or a corporation, where in one day they have hundreds of transactions to record from source documents, hundreds of receipts every single day. It opens doors to mistakes, misstatements, missing documents, theft, and many more. So a system, as in computerized system, can help us avoid those issues. What AIS provides us with are these three basic functions: efficient and effective collection and storage of financial data, supplying information for decision making, and putting controls in place. An AIS can collect transaction data from source documents, recording transactions in journals, and posting to ledgers right from the cash register when you are at retail stores or supermarkets like Jaya Grocers, Tesco, Carrefour. Every time the cashier scans your item, it will go direct into a bigger system, collecting information like what item is being sold, what is the amount, what is the quantity, what is the value of each, which account it should go to, and these accounts will be automatically totaled at the end of the day, etc. That is if they use computerized POS system or points of sale system like StoreHub, POS Market, IR software. And now with the use of cashless payment, we even have ePOS, internet-based, so that it can directly be connected to bank system for card payment. And AIS can produce manager reports and financial statements for managers, CFOs, and other key decision makers. But most importantly, these reports can be obtained almost instantly. For example, at the end of the day or at any point in time, say for example a sales manager, he could check on the system how much sales has the store made for the day, and maybe thinking how many more before we achieve the target. Or purchasing manager, he could check the inventories of goods, which goods are running low and how much he needs to make a new purchase for and when to make that purchase. And AIS can put controls in place to record and process data accurately for that matter. In theory, there are 5 principles of accounting information system, namely control, that is internal control, relevance, compatibility, flexibility, and cost benefit. Control principle prescribes that a system has internal control that would help managers control and monitor business activities. Now, this may include policies to protect company assets and ensure compliance with laws and regulations. Relevance principle prescribes that an AIS report should be useful, understandable, and timely for decision making, just like a normal financial statements that we produce at the end of the year for the needs of decision makers. Compatibility principle dictates that the system should accommodate the business activities, personnel, and structure of a company. Flexibility principle determines that the system is able to adapt to changes in the business or the company, be it its activities, environment, and needs of decision makers. It must also be flexible enough to adapt to changes in technology. Cost-benefit principle establishes that the benefits that a business gets from the system will always outweigh the costs. For example, the benefit that we can get from the system producing a specific report must be greater than the costs of time and effort to produce that report. And cost in any avenue is also influencing the decisions for the other principles, because at the end of the day, it will always be about weighing between costs that you invest, either monetary, time, or efforts, and the benefits that you can get from what you invested. For an accounting information system to work, it needs these components. We must have source documents, that is the source of data that we want to collect and gather from a business. And we need the device to key in the data from the source document, be it a computer, a scanner, or register. And from there, we need to process the data. Thus, we need an information processor. So the system must have a processor to process the data gathered and produce information needed by decision makers. For data, the system should also have storage, either a physical storage attached to computers or cloud storage. But for cloud storage, you need to always have access to it, thus internet connection, and that is an additional cost that you might want to weigh in. And finally, in order for us to view the information from processed data, a system must have an output device, be it a computer or a printer or something else. When an accounting system is developed, the objectives are to ensure the highest level of accuracy with the company's financial transactions and record keeping. It also allows specific employees to access the information they need, while limiting the sensitive information to others and protecting the overall security of company data. This will lead to increase in the ability of company to detect fraud and helps it ensures that its finances are running smoothly and thus having an effective control system or mechanism. These eventually lead to achieving company's objective. But of course, we know for a fact that we can either purchase an accounting system or software over the counter that would be good enough for our needs, or we can develop our own if those available in the market do not cater for the needs of our company. So for us to decide whether we should develop our own or simply purchase over-the-counter software or even use an accounting system at all, it all depends on several factors. They include, but not exhaustive, types of business activities, types of business entities, size of business, information needs of management, and may also include legal requirements. For the development of all AISs, it includes the basic phases of planning, analyzing, design, reporting, implementation, and support. The time associated with each of these phases is not fixed and depends on the company and its needs. It can be as short as few weeks or as long as several years. The first phase of system development is the planning of the project. This is when we determine the scope and objective of the project. We define project responsibilities, control requirements, determine project phases, project budgets, which is very important, and project deliverables. This is also when the management decide if it is feasible to develop the system needed by the company, or perhaps it could be deferred to different time, or maybe none at all. The analysis phase requires a thorough evaluation and documentations of the accounting and business processes in use by the company. This phase may include re-engineering to take advantage of modern best practice and the operating characteristics of modern system solutions. For your information, there will be at least 3 analyses involved: data analysis, decision analysis, and process analysis. Data analysis involves a thorough review of the accounting information that is being collected by the company, meaning what data does the system need to collect based on the needs of the company for internal users as well as external use. Decision analysis is a thorough review of the decisions a manager is responsible for making. What kind of decision does a specific manager need to make? And models are created based on the decision needs by different significant individuals in the company. For process analysis, it is a thorough review of the company's business processes, which can then be modified or re-engineered to improve the company's operations in terms of lowering costs, improving service, improving quality, and improving management information. The design phase takes the results of the analysis phase and turns them into detailed specific designs that can be implemented in a subsequent phase. It involves the detailed design of all inputs, processing, storage, and outputs of the proposed accounting system. Reporting is the driving force behind AIS development. It should provide the information that helps drive management decision-making and external financial reporting. There are numerous characteristics to consider when defining reporting requirements. The reports must be accessible through the system's interface, they should convey information in a proactive manner, they must be relevant, accurate, and reliable, and must meet the information processing style of the user and meet reporting standards. Because we're talking about financial statements, obviously. The implementation phase consists of 2 primary parts: construction and delivery. Construction includes the selections of hardware, software, and vendors for the implementation, building and testing the network communication system, building and testing the databases, writing and testing the new program modifications, and installing and testing the total system from a technical standpoint. Delivery is a process of conducting final system and user acceptance testing, preparing the conversion plan, installing the production database, training the users, and converting all operations by the new system. And finally, the support phase. It has 2 objectives. The first is to update and maintain the AIS, which includes fixing problems and updating the system for business and environmental changes. For example, changes in the Malaysian Financial Reporting Standard might necessitate changes to the reporting part of AIS. The second objective of support is to continue development by continuously improving the business through adjustments to business and environmental changes, which might result in future problems, new opportunities, or management or governmental directives requiring additional system modifications. In developing AIS, one of the crucial information is the accounts. And in accounting, a standard chart of accounts is a numbered list of the accounts that comprise a company's general ledger, which is basically a filing system for categorizing all companies' accounts as well as classifying all transactions according to the accounts involved in those transactions. By this numbering system, it is easier for the system to recognize and call the accounts. This is an example of charts of accounts. We have the category on left column, the ledger account with their assigned numbers in the middle, and the name of each account at the very end. AIS will call these numbers. Basically, we will assign a range of numbers to certain category. For example, here we have perhaps from number 1 to 299. This will be assigned to asset accounts. And then perhaps number 500 to 899 will be assigned to expenses. How wide the range is depend on your business activities. Because, for example, if your company is small, perhaps the number of debtors that you have will also be small, since you will not allow too many credit sales. So we do not need wide range to fit all possible debtors accounts. If your company is huge, credit sales might be a norm, therefore requiring more debtors accounts. Thus, you might set a bigger range or a wider range of numbers to the accounts. I think you will see the applications of charts of accounts in your AutoCount training later in this course.